Let's go ahead and start this discussion with kind of some of the tenets of using the force and see what we can learn about the market. Is there something that you think is the most important? I mean, one of the things we were talking about with just the overall structure of the movies was go into it having a plan.
Mhm.
We certainly say that about the market, having your exit plan, having your plan for what you're trying to accomplish and what you're looking for, a strategy and all that. Um, Arguably, the last trilogy didn't have so much of that plan, but what's your take on that?
It'd be hard to argue that they have a plan. Yeah, I agree. It's like that's something that having a plan is so important. It's just like as bad as The Last Jedi was. And then when I came on a year ago, I was all about talking about how The Last Jedi is terrible. And it is. I want to be clear about that. But Rise of Skywalker was even worse. And the whole trilogy, it was just there was no clear because they had no idea. The Last Jedi didn't really follow the prior movie, and then The Rise of Jedi. They both seem to be apologies for the prior movies. And if you're reacting to it, you need to be thinking, well, okay, I want to be my plan is I'll be buying here and I'll be if this happens, I'll be buying these stocks. I want my okay, if the conditions are like this, maybe I'll gradually increase my exposure, then I want to sell things. But if you go in there willy-nilly, if you have a bad plan or if you go in there with no plan and you start just buying stuff and to see what sticks and don't know why and buy and sell things at random times, that's not going to work. I mean, you're almost going to be compelled to be controlled by your emotions, which is never a good thing as a Jedi or as an investor.
Mhm.
And that is just going to be a road to ruin. You might get lucky, and have things work out for you because you buy something that's hot and it goes up. But you that will not work out in the long run. And definitely in a market like this, having no plan is a terrible idea.
Mhm. And I mean, certainly there's an element there too. I mean, kind of what you were saying, where it was the apologies, happening for the last movie and trying to fix things. And I feel like sometimes that can happen with revenge trading, where I really messed up this last trade, and so I'm gonna try and really fix it with this next trade, and kind of putting all your hopes and fears into uh, you know getting back what was taken from you. Does that ever work?
I mean, yeah, it can work, but it's not a good strategy for long term. I mean, yeah, it's like there's nothing, it's okay to like, okay, this didn't work. I'm going to buy it back when it comes in, but you have to establish that trade, or you have to say if there's a trade that's out there, but don't, you got to keep your check in. It's like I think that if you want to play revenge trade, it's like, well, if maybe buy an extra share next time or buy something like that. Just control it a little bit. So that's your anger, but you need to control it. You know, that's just if you let your emotions rule you, you're gonna get things go bad. It goes bad in the Star Wars movies, and it goes really bad in the stock market.
Hmm.
Yeah, I mean, I think you bring up a really good point there. I mean, and that's something that we talk about all the time on the podcast, or it's just even throughout IBD, is that you have to be emotionless, right? And that's what all these rules are here for, to help remove those emotions. So ideally, you don't get angry, and you don't have those revenge trades, and you're just kind of just like those Jedi's in the movie. They're pretty emotionless. Yeah, they even took Samuel L. Jackson and made him really emotionless in those movies. But that's really how investing should be boring, and that's how you really need to approach it, because there's going to be plenty of ups and downs to experience, and you're not going to survive if you don't manage your emotions.
Yeah,
Right.
that's just a basic tenet, and like, and you don't have to make all the money now. It's like there's this like
Yeah.
talked about, this is my last chance to make money. This is our last hope. It's like no, there's always a new hope. There's always another market rally. If this rally isn't working for you, just take it easy, back out entirely, or just keep a real minimal thing, and then, maybe get your mindset back better and get into a better market. You don't have to be fully invested now. You can be, that there's a time and place. It's like when they're on the first Death Star and Obi-Wan, it's like you can't win, but there will be other opportunities or something. There'll be other chances, and it's like and so it's like, and that's, and he's the Jedi Master saying that. It's a little bit when David Ryan or Mark Minervini or Bill O'Neill would be saying, hey, you don't need to be that aggressive right now. And these are people
Right.
who have
Right.
enormous skill, enormous track records. they would deservedly have enormous egos, but it's like they keep those emotions in check and they realize there's a time to play and there's a time to say, let's step to the side.
Hmm. Well, and I think, another thing that is in common with some of those stock Jedi masters is the humbleness. Kind of recognizing that as humans we're fallible, and there's a lot of things that we can do wrong, and that we don't have the answers. And so again, it kind of falls back to the rules to uh, save yourself from yourself sometimes.
Yeah, it's the rules are there to protect you. The rules aren't there to make it so you always win. It's
Hmm.
just like, well, why did I have to put on my seatbelt? That's not fair. Why did I, so it's just like they're there for reasons, It's like, why do they have rails on the stairs? Why can't I just go up and down all these stairs? And, it's like I can go up and down these stairs without problems. I mean, there's just, again, it's just like you're thinking the rules are there to protect you. The rules are there when things go wrong.
Hmm.
It's not you can't just think that everything is always going to go right. If you go in a mindset that everything's going to be perfect, I'm always going to make the right spot decision. I mean, that's just crazy. No, nobody can make the right spot decision, and that yeah. So rules are really crucial.
Hmm.
Well, and then also just having those rules, especially during a time like now. Now, who knows? Maybe the market goes down. Maybe we sell off a little bit to the 200. But or maybe we go into a correction, but and things look bad again. But when you get that fall through, you have to look for something to buy, no matter how frustrated you are, how many times you want to give up and say, oh, you know what, this fall through day, this new attempted rally is not going to work, right? You can't assume that. You got to just kind of try again, pick yourself up, try again, play small, because eventually one of these times it's going to slowly start to work, and that's when the market just will slowly pull you in.
And that's one reason to be light now, so you don't get
Yeah.
emotionally battered, so you don't preserve your emotional and financial capital. So when things do turn around, you're ready to go. You're fresh again. Something to say like if the market does turn south, you've got to have like an exit strategy. I'm talking about taking the plan, the exit strategy. I think one thing in an empire is that when they realize the empire probably knows we're here, like when they're on Hoth, and there's like the immediate thing the rebel commander
There was
says
this
is,
probe, and it probably got a
Yeah.
message out.
probably got the message. We don't know, but yeah, it's not looking great. We better start the evacuation. It's not like, hey, why don't we stay here and just wait? And then, okay, they get going on that and they do put up a fight, but then clearly they're losing. That's it. They clear out. Because if
Yeah.
the rebels had just said, you know what, let's just stay on this ice planet and see how we do. It's like, well, that would have been the end of the series. That
Mhm.
would have, I mean, that
and they
was
had
what it was
that
going.
and they had that big plasma cannon too, right?
Yeah.
So they knew that those ships were there, so they had the plasma cannon to allow the escape ships to get away, and they fought a little bit, but they also knew when to run away.
Yeah, and so that's just so important. There's nothing wrong with stepping back, and it's like not running away in panic, but trying to step away. And if you could do so in
I
steps,
think
like
there
I'm
was
going to
panic. I
sell,
think there was some panic there.
that's just a good way to to do it. So try to do it without emotion too. Again, it's hard. It's hard, but you don't want to get to a situation where you're forced to sell or you're panicking, and so you want to try to do it in a gradual situation. There, again, it's no fun to sell losers. It's no fun to sell a stock that's given up most of its gains, but have to follow those rules. And if that's what's happening, either you're out of sync with the market or the market just isn't really good. And it's not too hard to be both of those things right now.
Yeah, right. But I think that also kind of speaks to the whole idea of attachment. I mean, there's some people that get so attached to a certain stock or to their own opinion. And one of the things that I admired most about Bill O'Neill was that he could change. He had so much flexibility where he could really be so excited about a stock, but he really didn't have a emotional attachment to it. If the chart started looking funny to him and it started looking bad, um, he was out. And I could see him be like, I remember one of the last ones that I saw him so heavy on was Corning in 2000, and he was so heavy on that. But then when it started not working, within like 4 days, he was out. And so again, just as they say, like the Jedi should not have attachments, to kind of keep their emotions in check. I feel like sometimes you have to make sure that you're not getting attached to your own theories and you're not ignoring the data that's right out there in front of you. Um, that is saying, hey, something else is happening. And that happens on the flip side too. I can't tell you what I would have done if I didn't have charts to rely on after the
Right.
COVID crash, because
Yep.
there's no way that that felt like, oh, you know what? I mean, at the time, yes, you can see all the reasons with the the influx of what the Fed was doing and stimulus and everything like that, and it makes sense that we rallied so much. But at the time, I didn't feel like investing. You know,
Yeah,
it was really
exactly.
the chart, the chart that kind of helped guide me in that way, rather than, kind of letting my feelings deceive me.
Yeah,
Yeah,
and
that
go back actually quickly to the Corning. Sorry, Ed. Just for one thing, I'm sure Bill might even mention to you when all of a sudden the stock didn't. He saw it on the chart, but it didn't feel right. You
Hmm.
sometimes hear people who've been doing this for a long time. It just there. It's like it kind of looks okay still, but something's off, right? It's not acting like it's being accumulated. It's not acting as it should. It's not feeling right, and that can give you even a little bit more of a heads up that maybe I shouldn't push it here. I'll give it a little bit of a chance. I'll have a little bit of a position, but I'm not going to be as aggressive as I normally would.
Hmm. And then maybe we could also talk about kind of the cockiness too. I mean, there's the famous part where Han Solo, tells Luke Skywalker after he's like, I got one. Hey, don't get cocky, kid. Is there an element of that where you have to again have that kind of humbleness and even if you get a leader, how do you keep yourself from kind of getting too full of yourself and losing your losing your strategy because you had one winner.
I mean, look, that's always an issue because it's like Chris Gessel, our chief content officer, used to say like, "Oh, that stock reflects my worth as a person." He's just joking around, but it's just like it's hard not to feel, "Oh, I'm so smart, I'm so great, look at me, I'm a genius." But and I know that like if a lot of new investors, especially if you kind of like if you're a new investor in 2020, it says like, "Woohoo, this is easy, I'm the greatest." It's like so you absolutely have to you know, take that in check as well. I mean, the reason why is that, you know, having, being so full of yourself is not why you're successful. It's because if you're looking at these starts and you're buying the right stocks at the right time, and then, trying to manage it properly, and all this is sort of dispassionately as much as possible, that's how you make gains in the stock market, not being cocky. And there's one reason why, in general, all these studies say that men are not as good of investors as women, because
Right.
men get their egos much more attached. Whereas like women is like, well, I want to make some money. I mean, it's like they want to make some money. They may have just various goals, but it's not the same necessarily of ego. Just where men, it's just like, oh, I have to prove the market wrong. It's like the market doesn't care about you. The market will squash you, and it's not even noticing. And it's just like doesn't So you just have to recognize that you're trying to score wins here, and in these temporary battles, writing trends, but you are not the master of your fate in that regard, where you cannot impose your will on everything, and you have to just realize how small you are, no matter how successful you are in the moment.
Hmm.
So, Ed, just can a small amount of rebels turn this around? We have just a handful of stocks right now that haven't slipped through the fingers. And it's kind of the oldie and goodies, the large cap tech. Could they hang around long enough to turn this market around?
Yeah, I think was seeing something, and maybe Ed, you shared this, that it was like 7 or 8 stocks that was responsible for like 80% of the the performance this year or something like that.
It's certainly been enormous, and then
Yeah.
especially, yeah, so, like, they have the S&P 500's gain and, like, no, by themselves, they need more friends. They need more to come in. I think there's been an attitude, it's like, if you're feeling happy, it's great if you have those stocks, but you have to remember those stocks, and there's some other names, some biotechs, those names that have done really well, but, the end of Last Jedi, 99% of the rebellion's dead, and the entire rebellion can pack into the Millennium Falcon, and they're all singing "Shiny Apple, Happy People." Basically, it's like, no, that's not that. You need market breadth here. I mean, that's just not gonna work. So, you need to see more breadth. I mean, that's one of the things. This is deceiving. It looks like we're not that far from highs, and maybe we won't be. But again, the advanced decline line is terrible. The equal weight ETFs just are not showing that strength, and it's just suggestive of I know we all like to think of it, that one hero like in the Matrix or somebody who can tear down everything. It's like, guess what? That's not really what happens,
Mhm.
um, and so that's when that improves. And it wouldn't take much. Again, I got a couple of good days, and the indexes and these equal weights are going to power through some key resistance. There's a lot of stocks out there near buy points, but again, it really wouldn't take much for us to break down, and there would be left of nothing. I mean, what happens if Nvidia and Apple and Microsoft start selling off? And it's like, what are we going to rely on a handful of home builders that are extended to lead the market? And it's just like, I don't think so. I mean, it's just so that's sort of dangerous, and it also just makes it hard. I think it gives people a false sense of security. Oh, everything's fine out there. I mean, you know, it's not that hard to make money. It's like, well, if most stocks are falling, it is hard to make money.
Mhm.
I mean, and if most stocks go up for a couple of days and then reverse lower, it's really hard to make money. So that's the kind of environment it has been over the last few weeks, even though we might just be a few days away from something getting better.
Mhm. And I think one of the problems is that you just some people would say, well, if only 7 stocks are working, why not just own those 7 stocks and that's it? And I mean, yeah, that's easy to say, but kind of harder to do sometimes. Especially, as we've noted, there's been so many stocks that have looked fine, they've looked good, they're making progress, and then the rug gets kind of ripped out from under them, and it's when they come down so fast. So that does make it a lot harder. So to kind of just wrap up this segment in a little bow, what do you think? What do you think is kind of the biggest takeaway here of how we can be more Jedi-like?
Uh, you know, I, I I think this is definitely this is there's a time to just sort of, part of the emotions and realizing that, if you can control your emotions, and part of it is passion, is to look at the is that by doing so, you would look at the market and realize it's not a great environment to be aggressive. So right there, that's going to help you. And then just trying to have rules that you follow as calmly as possible, and keep on training. Guess what?
Hmm.
I know that it's nice to have instant satisfaction. I mean, like, oh, I'm the greatest, I'm a hero, but it's like, no, it's like you're supposed to train for a long time. Becoming a Jedi is not just picking up a lightsaber and waving it around. Becoming an investor is something that you have to take time and constantly try to work at and improve and stay humble. So I think staying humble, trying to stay calm, recognizing who you are, recognizing the market you're in. These are all the kind of things that Jedi investing can do to help you, succeed.
Yeah, and for as good as Bill was, again, and I got to watch him for 15 years as he was trading. Even at the end before he retired, he was still working on things and trying to get better. And okay, what other data can I use? Let's do a study on this. Is there some way that we can improve things? And he was constantly doing that post analysis. Okay, this this is what I did. What could I have done to get better?